What's up, guys? Sam here, and we've got three stocks that just reported earnings. Nothing to laugh about. The earnings were solid. They're good buys. It's Google, Shopify, and Robinhood. Just so happens they're also really well-known consumer stocks. Let's jump into why these are not overpriced, even though people are going to say they are. All right. So look, here's Robinhood, lean, profitable. They're scaling out. Higher options volume, higher equities volume, higher crypto volume, all in their app. Q2 earnings were 42 cents a share, beat the 30-cent estimate. Revenue jumped almost 50% year over year, almost $1.99 billion revenue. And they're pulling in more margin and interest income than transaction-based revenue. So that is the chef's kiss for a fintech company, where they stop having all their fundraising announcements be about how much their gross merchandise volume is and start being about how much money they're actually making. So this is a massive tailwind for Robinhood with the Trump administration. Definitely, doesn't hurt when you're not worried about regulation as much. And then they're getting up over 112 here. It could be an awesome opportunity to buy this. Monthly users going up, net deposits up, assets under custody, record high, of course, that hasn't gone down. Credit cards, retirement accounts, crypto wallets. You've probably seen the Robinhood credit card. You know how the cash cows of the rewards programs are for airline travel rewards programs, credit cards, Capital One. These are huge companies, Microsoft, MasterCard, Visa. Crypto wallets available globally now. So that's something that Visa and MasterCard do not have. Robinhood does. So there's a reason that this is the darling of the stock market right now. They are targeting serious investors as well. They have that $1 billion buyback, which was approved back in May. And it's not exactly tied to any one price. I know $20 is sort of the price being floated around for that buyback, but that's not quite true. This is a new Robinhood. It's 2025. And again, they're making more from the money they have than from people trading. So it's transitioning a little bit to quietly take on Schwab, Thinkorswim, this platform I'm actually using. So maybe I'll be using Robinhood sometime when it gets a little better to look at stocks. Google, Alphabet's numbers, pretty awesome. This chart structure looks incredible to buy over this level, 198, getting up to that big whole $200 level. But if you like fundamentals, which never hurts if you're going to hold it for more than a week or so, their revenue is almost $100 billion. And I actually would hold it for more than a week as long as it stayed above that level. So personally, set a stop if I did hold it for longer than that. But 14% increase year over year. Just be careful. Earnings per share beat by 40 cents. It's 231. You see it right there. That was about a couple weeks ago, though, and it's still held over this 20-day moving average, which is the real story and why this video makes sense right now, as Meta earnings also just came out and look strong. And the reason for this whole operating income going up 30%, net income of 30 billion is Google Cloud. That's 14 billion, almost up 30%. It's profitable quarter over quarter. That's a big increase, 30% quarter over quarter. YouTube ads up 20% year over year. Love those YouTube ads. If they're going to be on my own channel, that is. I actually just bought YouTube Premium. CapEx was 10 billion this quarter, and they're projecting 40 billion more in the second half of the year. And it's going to go into AI infrastructure, of course, data centers, TPUs, everything behind Gemini. They actually believe they are hosting some of OpenAI's data or models. Don't quote me on that. Amazon definitely is, as of this last week. Which OpenAI, of course, is the behemoth that's going to take the most data center capacity. They need cloud services. OpenAI doesn't have cloud services. Google also announced 30 billion buyback on top of what they've already got going. Stock's at an all-time high. So what's not to like? That's not true. Of course, as I zoom out, the stock is not at an all-time high, but it's very close. And I don't think I'm premature in saying that it will be very soon. So that's Google. And then there's Shopify. They reported Q2 earnings last week, and they were awesome. This gap up is pretty cool. I like to look at the 24-hour. That's what it looks like on the 24-hour because it can help manage risk overnight. Point is, Q2 earnings revenue beat estimates of, the revenue came out at 1.9 billion. I don't know exactly what the estimate was, but it's up 30% year over year, which is significant. Earnings per share came in at around 20 cents here, and over 300 million of free cash flow. Fifth straight quarter of positive free cash flow. Pretty awesome for the, arming the rebels, I think is their mantra. All these little shops that don't want to get gobbled up by Amazon, still want to be able to sell their products and don't know how to code, set up a Shopify store. It's awesome. What's different 2025 versus past is their Shopify Plus. It's taken on more high, brow merchants. It also has higher take rates, so they get a little more money from these guys through the fees. When you do get lower fees based on volume, but Shopify Plus, as I understand it, they have to pay Shopify more than just a traditional merchant, even if the merchant were doing the same amount on Shopify versus Shopify Plus. So they're laying on payments, logistics, AI tools, Shopify Magic. Sounds pretty fancy, which is like the AI copywriter Jasper sort of situation that writes product descriptions. And it's not just software, though. They are doing global Shop Pay, and they're integrating with Meta and Google Shopping. So if you look at analyst upgrades, the ecosystem lock-in is big. All the tech companies are basically circle jerking each other. It's no longer just this scrappy e-com platform, even though that's its brand, of course. It's infrastructure. So they are sitting on $5 billion in cash, no debt. M&A could come back into play. Stock's rebounding up about 40% from its April lows. And when I say 40%, I actually mean now it's like 140%. So technically, I know some people say 40%, 140%. Well, the same difference, right? So look, Robinhood, lean, profitable, about to hit all-time highs. Google, scaling AI, printing cash. Google Cloud, they might get to host some OpenAI, which means Microsoft will actually be paying them through OpenAI, basically, because Microsoft has OpenAI by the balls. And then Shopify, sticky, global, efficient. This is Main Street versus Wall Street, but everybody's in bed with each other, so who knows the difference. So let me know which one you're watching. Drop a ticker in the chat, drop a comment. I'm Sam, and I will catch you next time. You guys are awesome.